Nvidia CEO Jensen Huang got asked the question that every Nvidia stock investor wants to ask, and that is, what's demand looking like beyond this year, and how can you be so confident that your sales won't fall off a cliff after these large customers build up their data centers optimized for AI? That's the question that every Nvidia stock investor is so concerned about, the long run demand. So Nvidia's CEO answered that question and gave a lot of insight, and I wanted to share those details with you in this video.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So here is that question I was referencing, and it came from Bank of America analyst Vivek Arya. And the question said, what is on your dashboard to give you the confidence that the strong demand can sustain into next year? And has DeepSeek and whatever innovations they come up with changed that view in any way? So if you remember, DeepSeek was a Chinese AI company that came out with an innovation. They were able to build a large language model at a fraction of the cost that OpenAI built ChatGPT with. And that development led to Nvidia stock price crashing by 17% on the day following the announcement, because investors and the stock market was concerned that if DeepSeek can build this model at such a lower cost, does that mean that companies that are building these models don't need to buy as many of NVIDIA's chips? And so its revenue forecasts for future quarters and future years were lowered as a result of that development. So that's what this analyst wants to know from NVIDIA CEO directly, right? Because this is the first time the NVIDIA CEO held a conference call, a quarterly earnings conference call, since these developments with DeepSeek came out. So let's see what the CEO said in response to this question. So CEO Jensen Huang responded by saying, look, we know several things that we have a fairly good line of sight of the amount of capital investment that data centers are building out towards. So they have a line of sight, meaning they have pretty good visibility into what demand for capital investment looks like. And since NVIDIA's sales in this segment, the data center segment for AI, account for 50% of the overall sales, are just a few companies: Microsoft, Amazon, Alphabet, and Meta Platforms. Those four companies make up a very large percentage, close to 50% of NVIDIA's overall revenue in that data segment. And when you're a business that generates a high concentration of revenue from few customers, you make it a point to hold close relationship with those customers. You hold conversations regularly. You touch base with each other. You give each other information that helps both of you optimize this spending, this relationship. It's in the interest of both parties to communicate with each other, let each other know what the plans are, and let each other know what you're thinking about spending, what your orders look like for not just this year, but next year and perhaps 2 years from now. And so that's what I think NVIDIA CEO is alluding to here, with having a pretty good line of sight into the capital expenditure plans of its very large customers. Now, this is very similar to another company that I follow, ASML, which sells these very, very highly specialized units for semiconductor manufacturing. And it has relatively few but very big customers, a high concentration of revenue coming from very few customers, namely Taiwan Semiconductor Manufacturing, Samsung, Intel, Micron. So less than 10 customers make up a large percentage of ASML's revenue, and they have a similar type of relationship with their big customers. And they talk about knowing what their demand is going to look like a couple of years, 3, 4, 5, 6 years into the future, because they're in close communication with those customers. And so that's why Jensen Huang can be confident in the company's future prospects because of that relationship. Okay. So it goes on to say, we have, of course, forecasts and plans from our top partners, right? So the top partners have given them their forecast and their plans. Of course, this is subject to change, but if all else remains equal, if things remain relatively where they're at today, the forecasts are stable, they have a pretty good idea of what demand is going to look like. And then they have near-term signals. Of course, they have purchase orders and forecasts. Midterm signals would be the level of infrastructure and CapEx compared to previous years. You've seen that increasing. And then long-term signals has to do with the fact that they know fundamentally software has changed from hand coding that runs on CPUs to machine learning based on AI-based software that runs on GPUs and accelerated computing systems. So longer term, they're talking longer term is like 6, 7, 8 years and beyond. They're confident not because of these relationships with their customers, the existing customers, but they're confident because of the value the products add and the competitive advantage against previous generation products. So just comparing the value that their products add compared to legacy products, they're confident that there's going to be strong demand in the marketplace for their products because they're confident in its value. And so they feel like they've only tapped consumer AI for now, and search and some amount of generative AI, advertising, recommenders, kind of early days in software is what the current sales figures are alluding towards, or the current sales numbers are addressed to. The reason why these companies, for the most part, are purchasing these data centers optimized for AI is because for these use cases right now, consumer AI, generative AI, advertising, recommending systems, that's the current use case for AI. But the CEO saying that the next wave is coming, and that's things like agentic AI for enterprises, physical AI for robotics, sovereign AI as different regions build out their AI for their own ecosystems. So the CEO is confident that the increasing effectiveness of their GPUs, the increasing effectiveness of their systems, and the innovation they're adding to the market is going to lead to all of these new use cases, these newer use cases, because the technology is going to step up, and that's going to open up new opportunities and demand from new segments, right? I've been talking about segments like healthcare that could drive significant demand for accelerated computing. Segments like driverless car technology could pick up the slack for when these large companies like Alphabet and Amazon, when they slow down their spending, it could pick up from companies like Tesla and Ford and GM and VW, etc., building up their computational needs for these driverless car that will be on the road. So that's why the CEO feels confident. And I've evaluated this industry, and I'm optimistic that even if not all of these use cases comes to fruition, if only one or two of them turns out to be the next thing that drives the next big cycle for spending on these systems, it could be a several years long runway for Nvidia to follow up on this current wave of spending. And so I can understand why the Nvidia CEO is optimistic about the future prospects. And I don't know if this is enough to alleviate the broader market concerns for Nvidia. There probably needs to be more tangible evidence that Nvidia's revenue will not fall off a cliff a couple of years from now, or at least the rate of increase will not fall off a cliff. And that's probably why Nvidia stock has failed to really continue rising, is because of those longer term concerns. I don't think any Nvidia investor is concerned about Nvidia's revenue this year, right? Everyone is pretty much convinced that Nvidia will deliver an excellent year of revenue growth and profit growth in 2025. I think the concerns are starting for 2027 and beyond. And so this is a good start for Nvidia to start to talk about those longer term prospects. It would be even better if Nvidia can start demonstrating more tangible evidence that there will be customers from 2027 and beyond to sort of alleviate those investor concerns and unlock the potential for the stock price. That's the biggest catalyst that could unlock the stock higher from here. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.